Good morning, traders and investors. Welcome back from the Hari Raya holidays and also welcome back to our morning trading recommendations channel. Before we delve into today's market analysis, let's remember our key disclaimer. The insights shared here are for educational purposes only. Trading futures involve inherent risks, so always conduct thorough research or consult a professional before making any financial decision. Now let's start with the commodity markets updates. Overnight soybean oil for May month fell 1.58 to 46.02, while soybean futures ended lower. In the China markets, the Dalian most active palm oil contract currently traded on the September contract also experienced a decline, falling 18 point to 7844. I'm sorry. For the Malaysia palm oil futures, however, settled higher on Tuesday, breaking three consecutive sessions of losses supported by the prospect of lower inventory. Nonetheless, the higher premiums kept gain, with FCPO for June month rising 23 points to 4318. Given the bearish performance of soybean oil in Dalians, the FCPO could trade lower. Our view for the bigger charts remain bullish, which is daily and weekly, while in the shorter time frame, the price is likely to trade in a correction mood, and we anticipate the price has room for further downside, with the support range seen at 4275 to 78, and then the next support will be 4250 to 54. Meanwhile, the closing price on the previous session, which is 4320, will be turned into as a resistance range. So for today trading plan on the FCPO market, short positions may be open below 4300 with target at 4254 to 32 and a stop loss at 4330. Alternatively, long positions may be open above 4300 with target at 4347 to 4376 and a stop loss at 4270. So for the trading plans on FCPO, we always will recommend to set about 25 to 30 points of stop loss from the entry price. So this will be our strategies. All right, now we turn to the index market. Okay, now we are focused on the index market updates. Overnight, the Dow Jones fell 2 points. However, the Nasdaq Composite and S&P 500 ended higher on Thursday after the data showed that the producer price increased only modestly on the March month, um, elevating some fears over the persistently high price pressure following hotter than expected consumer price gains for the month of March. The Bursa Malaysia Benchmark Index (FBM KLCI) closed marginally lower on Tuesday, attribute to profit-taking activities ahead of the Hari Raya Aidilfitri's holiday, with FKLI futures for the April month falling 5 points to 1555.5. So following the mixed performance of US market, the FKLI could trade within a range. Fundamentally, we expect the local boss to consolidate above 1500 psychology level in the absence of fresh catalysts, while investors are still reeling from the midweek festive break. Technically, the index fall back into the consolidation range. Okay, as it broke down the immediate resistance at 1560 to 61 in the previous sessions, which you can see in the hourly chart. There is a very strong bearish bar um, to break down the previous resistance range. The price is likely to remain in the downside bias with the first support range see at 1549 to 48 range. Breaking this range will see the next support at 42241, while the resistance range was at 1554 to 1555 range. Okay. So for today trading plans on FKI markets, short position may be open below 1559 with the target at 1549 to 42 and a stop loss at 1564. Alternatively, long position may be open above 1559 We target at 1566 to 76 and a stop loss at 1554. Okay, so now in conclusions, our morning trading recommendations are in here. Remember, successful trading demand expertise, strategy, and discipline. Stay informed, adapt to market shift, and manage risk wisely. Thank you for joining us and wishing you a profitable trading and happy investing until next time.